The United States Agency for International Development, Prosper Africa, Power Africa, and the Institutional Investor Network, including Chapel Hill Denham, are facilitating a reverse roadshow for U.S. investors to Nigeria. Meanwhile, analysts at Parthian Securities expect trading at the equities market to be calm as investors wait on the sidelines in anticipation of a catalyst to boost buying activities. Oluwaseun Dosunmu, head of investment research at Parthian Securities, joins me now for more market updates. Oluwaseun, thank you for joining us today.
Thank you, Esther.
Just to get your thoughts on the investors' drive to Nigeria, looking at opportunities across the landscape, the investment landscape, from equities, FDI, etc. What are your thoughts?
Thank you for that question. So basically, we're seeing that Nigeria is at a particular point now that foreign investors are actually looking to see what's going to happen, because after we had the elections this year, we had two major policies that were announced. The implementation, though, has still some challenges, but basically investors are watching to see how Nigeria is going to handle these policies. Now, the proper implementation of these policies will actually determine whether or not investors will flow back into the Nigerian space in torrents, or we'll just see them coming in trickles. Now, key to this has to do with the exchange rate, the floating of the exchange rate and all. But like we know, that is actually pegged to a couple of things. One of which has to do with our oil production, and also right now the crude oil prices. We've seen that crude oil prices dropped sharply last week due to the lifting of the sanctions of Russian crude in the international market, and as such, prices dipped sharply. However, we've seen that prices are becoming resilient, given what is happening in Israel in terms of the tension that is currently happening there. And basically, one would ask, okay, so how is Nigeria positioned to take advantage of the current increase, or the increase we're seeing in crude oil prices? Secondly, how are we positioned in terms of our oil outputs to also benefit from this? I mean, these are the major questions that need to be answered going forward. This would actually determine whether or not foreign investors would, like I mentioned, come in to our market in torrents.
Sharon, you're absolutely right. And two major points you made there. Policies taken by the federal government, devaluing or floating the naira, and of course, removal of a petrol subsidy. But I mean, recent reports that we've been seeing in the newspaper dailies and the news, etc., suggest that the government may be struggling to sustain this subsidy, as it were. Some have, even gone as far as saying that it may have even been removed, in theory, as it were. And then we know that dollar supply is still a big challenge for the federal government. Many monies of foreign companies are still trapped in the country. And it's interesting because this has been the momentum that the market has been riding on. And like you said, if one were to, take it all apart and see, okay, in terms of what are the options of the government in terms of boosting dollar supply, main receipts, FX receipts come from oil. We know what the challenges are on that in that aspect. For the subsidy, we know that rising prices mean rising higher cost of petrol, landing costs, etc. Who's going to pay the difference? The government is doing that at this time. So for investors digesting all of this, to what extent do you think that this momentum will last? I know you have said that it's perhaps a wait and see, but if you do the math, as it were, I suppose the answer is not too far, not to preempt anything. But let's hear your thoughts.
Okay, so basically, like you already mentioned, there are a couple of things on the table that needs to be addressed. While I can't expressly say what the governments will be doing or what their plan is, what I know is that I believe they are actually putting things in place to ensure that these things are resolved. Because the question that comes to mind is that they already know what is happening, and a lot is at stake. We already had the president go make presentations in the foreign in international markets to foreign investors about Nigeria being a prime location for investment. So right now, all we can do is just wait and see. Wait and see what they have planned, because we still have about 2 months before the end of the year. yes.
Right. Well, in
Basically,
the meantime, the market, I mean, we're still at multi-year highs, as it were, at over 67,000 points. So obviously, investors are still finding value at the market, particularly domestic investors who have stuck it out at the market and have been rewarded handsomely since the beginning of the year. But talk to us about what investors are buying right now. We know there's a focus on high yielding stocks, and the banks have been the best, have emerged the best, the most benefit, the best stocks reward, as it were, for investors. But talk to us about stocks that you are keeping track of.
so right now, what we've been doing is just cherry picking because we know that during the second and third quarter, there was an expected move in the markets, which normally doesn't happen. But then right now, we're just cherry picking and looking at those stocks that will give us some good potential upside in the medium term. We're basically adopting a trading stance, not an investor stance. So we're making short-term plays in the market. Today, we saw that the banking sector didn't do quite well. A couple of banks were down. The top tier one banks were not doing quite well today. However, um, Boa Cement is actually the stock that is lifting the market today. When it comes to the volume of transactions, we're seeing that Nemeth, Zenith, and Access top the chart in terms of volume traded. Generally, we know that the market is hovering between 66,000 and 68,000 band, and we don't expect an outrageous move in the market because right now the market is just oscillating between profit taking and
Right.
bargain hunting activities.
Now, for the banking sector, yes, the banks have done very well this year. We know, obviously, primarily outside of fees and commissions, the dollar revaluation, as it were. But I know investors must be thinking about a monetary policy drive of the CBN. I mean, going forward, we had that MPC that we missed. We're still waiting for when we're going to have the next one. But just talk about what the market can expect in terms of interest rates. We know we're seeing the impact of rising interest rates, rising inflation, etc.
Okay, like you mentioned, we didn't have the last monetary policy committee. Right now, we don't have a clear direction as to what the CBN is doing, and that is because the new CBN governor has not made a statement. But like I mentioned earlier, it's a wait and see game. All eyes are focused on the next MPC meeting and the policy direction in terms of the movement of interest rates. Unlike before, it was much easier to predict. But then when we look at the indicators that have been driving the current increase we've been seeing in the NPR, inflation is still high. Inflation is still about 25.8%. We still have issues as regards, our FX and things like that. So the question that comes to mind is that is the CBN going to reduce the interest rates, or are they going to increase interest rates? Or on the other hand, will they retain rates? It's actually hard to actually determine right now because we have new leadership,
Right.
and that would actually dictate what would happen in the next coming months.
Right. So as we proceed into the last quarter of the year, what is your forecast for market trading? What do you foresee ahead in terms of what a key catalyst will be? Because that's what we're talking about today. What is that catalyst, that additional catalyst that the market is hungry for at this time? We know that perhaps on that list, obviously, further reforms and the ongoing reforms taking root. But for you, what is your forecast?
Yes.
What do you see ahead?
So basically, in the next couple of weeks, I expect a slowdown in activities. Basically, because we've seen a rally in the last couple of months, that would actually, prepare the market or prepare investors for, December and January. The rally we've been seeing in December and January. We know that in the last four years, the month of January has been on the uptrend. I expect that same pattern to, persist. However, I'm also putting into consideration the fact that, the FX, the in quotes technical devaluation that happened this year, has different impacts on different companies. So that would actually affect some companies negatively, and as such might not be able to declare the kind of dividends that they declare at the end of the year.
Right.
While for others,
Go ahead. Finish your thought, please.
Okay, well, for others, I mean, the devaluation has actually propelled them even to,
Right.
producing better numbers. But right now, we can just hold off and watch what's going to come into the
Okay,
market in
fingers
terms of
crossed on
policy
that.
direction.
Thank you so much, Oluwaseun, for talking to us today. Appreciate your time on the show.
Thank you.
Oluwaseun Dosunmu, Head of Investment Research at Parthian Securities.